Hello traders. Today is the 4th of August 2013, and the title of this video is How Do the Pros Trade Asia Indices? We are now looking at China 50 index. This is the China index that represents the 50 stock, 50 blue chip stock in China, China 50 index. We are on a daily chart. When professionals are trading indices, they will check first the market environment. All right, the market environment is very, very important. Is the market volatile? All right, is the market too risky? All right, is it an efficient market? All right, so you want to check the market environment. If the market environment is not suitable, one will not trade. All right, depending on your trading style. All right. So if you have a high impact news, if you have a volatile market, if you have a market going up and down anyhow, a market that is not efficient, okay, a market that is violating its own principle, okay, a market that is distorted, professional will not trade. But depending on the strategy that you want to apply, your current trading strategy, if the market environment is not suitable with your current trading strategy, you may decide not to trade. So the first thing that the professional will check is the market environment. Talking about the market environment, next week is the first week of the month, all right? We know that during the first week of each month, all right, we have a lot of high impact news. These high impact news will change the dynamics of technical trading. And if you are a technical trader, okay, the high impact news can change the dynamics of the market and violating the technical setups. So the first thing one must check is the market environment. Is it too volatile? Is it too risky? What sort of market do we have? Is it a trending market? Is it a market that is consolidating? You want to check the market environment. The market environment is very, very important. Talking about the market environment, we are also talking about the market sentiment. Is the market generally bearish? Is the majority of market participants bearish? If the majority of market participants are bearish, if we are bullish, we need to be very, very careful. On the other hand, if the majority of market participants are bullish, but we are bearish, we need to be very, very cautious. So professional will always check first the market environment. The next thing that the professional will check is a setup. So you are looking for a viable setup. Once we see a setup, we must validate the setup. So for instance, if I tell you now, for traders who understand the Elliott wave pattern, for instance, we see a zigzag pattern. All right, after an impulsive move, we see a zigzag pattern that is completed. This is a setup. Now, what do? Once you see the setup, you must validate the setup. One way to validate a setup is to check the higher time frame. I will give you another example. For instance, a trader may see an inverted head and shoulder pattern, which is okay, a bullish pattern. This is a setup. So if you see an inverted head and shoulder on the head and shoulder pattern on the weekly chart, this is a setup. You must now validate that setup going into the weekly chart, quarterly chart, yearly chart. Sometime you will be surprised. You may see a bullish setup on a lower time frame, but if you try to validate the setup, you may notice that it's a useless setup. And a lot of traders are getting into trouble because they see a setup and they do not validate the setup. Once we see the setup, whether we see an area wave setup, whether we see a stochastic setup, whether we see a Fibonacci pattern setup, whether we see an area wave pattern setup, Gartley pattern, or zigzag pattern. Gartley pattern is a Fibonacci pattern, butterfly pattern is a Fibonacci pattern. You want a bat pattern, it's a Fibonacci pattern. These are setup. But when you see the setup, you must validate the setup. Without a valid setup, there is no winning trade. Full stop. We see an earlier wave pattern, okay, a flat correction after an impulsive move. We see an ABCDE or a parallel triangle, as some traders like to call it, after an impulsive move. We want to validate the setup. All right, very, very important. Without a valid setup, there is no winning trades. Full stop. All right, so the market environment, we want to check whether we have a viable market environment. Then we want to now identify a setup. The next thing, we want to validate the setup. We have validated the setup. We must now wait for a signal. There are two types of signal, a direct signal and an indirect signal. All technical indicators give an indirect signal. Indirect, okay, IN, an indirect signal, okay, but only the price will give a direct signal. When we receive an indirect signal, we must wait for the price to confirm the indirect signal with a direct signal. All right, when we see the signal, we do not enter the trade. All right, so the setup side time frame should be different from the signal time frame. Now we receive the signal, we are waiting for, okay, a low risk entry point. Now this is very important. So you want to check the risk reward ratio. Is the risk reward ratio acceptable? If it is a useless, crazy, okay, risk reward ratio, we may decide to step out. We don't want to trade it. All right, so for instance, if a trade is offering us 20 pips, but the risk is 100 pips, so you will need a stop loss that is 100 pips. For a winning trade for 20 pips, is useless. All right, completely useless. You don't want to be part of it. If you want to take it, you know that it's a crazy trade. You want to keep your eyes on it and monitor it carefully. All right, so that's why it's so important. As we are about to enter the trade, we see the signal we want to enter. We want to check the risk reward ratio and locate a low risk entry point. Trader use hotspot trading zones. Trader use Bollinger Bands. There are different ways traders locate a low risk entry point where they can enter the trade with a low risk for higher reward. Once we enter the trade, now what do? Do we sit cross our leg, cross our fingers, cross our head, whatever you want to cross, hoping that things will work out in our favor? No, you want to take control. You manage the trade. If the signal has failed, you come out straight away, full stop. You use the 5% money management rules, all right, and you are in charge of the trade. So after everything has worked out perfectly for us and we are now in the trade, we must manage the trade. Sometimes you need to get out sometime. For instance, you enter a trade, you did not check the market environment. Now suddenly you notice that the Fed is about to speak. The Fed is about to speak. That can change the dynamics of the market instantly. So you realize that you haven't paid attention to that. Now somebody is speaking about it and you are aware of it. You want to minimize your risk. So if you have many trades that are opens, you want to maybe close some trades, minimize the risks. This is sometimes you have to do that. You just manage the trade, say, I'm closing this one, which means sometimes you take some small losses because you don't want to take bigger losses. This is how the professional are trading, okay, indices. But this video is about how do the pro trade Asia indices. To summarize the introduction of this very important video, we want to check first the market environment. We want to identify, okay, a setup. Next, we validate the setup. Then we wait for signal, and then the entry point, checking the risk reward ratio, making sure that the trade that we are trading is not a useless trade. All right. And once we are in the trade, we must now manage the trade. When we are managing the trade, by the way, we must always adhere to the 5% money management rules. Okay? Very, very important. Next thing, how do the pro trade Asian indices? We have here a China 50 index, and we are on a daily chart. Professional, we trade around key levels where there is a value. I'm going to focus on two levels. In this video, I want to highlight two levels for traders. These levels, this is what we call the equilibrium line. Okay, now equilibrium lines. Okay, the equilibrium price levels divide the market into two zones: the bullish zone above it and the bearish zone below it. Now, traders that are following us for some time will understand this, that the strategy that I'm telling traders now, because instead of telling traders buy, sell, I give to traders equilibrium key levels, equilibrium price levels, where professionals are paying attention to. So, the equilibrium price level, these are these are psychological price level, and they will divide the market into two zones. Above this equilibrium price level is a bullish zone. Below it is a bearish zone. When we are in a zone, suppose we are in a bullish zone, there are what we call a transition zones. Though it's a bullish zone, it's not 100% bullish, which means we cannot just buy anyhow in the bullish zone. There are zones that we call transition zones, which means the price can go down. We can expect a contra trend in a transition zone. There are another zone that we call an invitation zone. The invitation zone are hotspot on the zone. Invitation zones for the bullish zone is an invitation zone is a minor zone of a bigger zone. So for a bullish zone, we have an invitation zone and also transition zone. Same thing for the bearish zone. But the transition zones are the zone where we see a contra trend. So for the bullish zone, the transition zone are the zones where the price can go down for a while before going up. The invitation zone are very important for us. These are support levels. Either it's a plain support level, real support level, or a resistance that has been converted into a support level. How if resistance converted into support level? The price must break above the resistance level, retest that resistance level, and the price must find a support on that resistance level. This is a conversion of a resistance level. Very, very important. So we are watching the support level in the bullish zone. The support level is either a plain support level or a resistance level that has been converted into support level. In the bearish zone, we must watch the resistance level. We want to draw all the resistance level in the bearish, and also watch the support level that has been converted into a resistance level. How a support level is converted into resistance level. Price must break below the support level, retest it, and find a resistance right there. So this is it. For the Asia 50 index, this is China 50 index. My apology to traders. China 50 index, China A50 index, okay, China Alpha 50 index. All right. The first level that I want traders to remember, the equilibrium price level that traders must watch. This is the long-term equilibrium price level, which we must watch, by the way, which we must watch until the end of this year, 2013. The key level you must not forget for China A50, China Alpha 50, the China 50 index. The equilibrium price level that we must not forget up to the end of 2013 is 7855. Note it down, write it on your fridge. If you trade, okay, this index, China A50 index, you must write this level down. It's a very important equilibrium price level, dividing the market into two zones. The key level is 7855. Above 7855 is a bullish zone. Below 7855 is a bearish zone. Priority to bullish signal above, priority to bearish signal below. One must not buy anyhow in the bullish zone, as I mentioned already, and one must not sell anyhow in the bearish zone because of the transition zones and also of an invitation zone that are minor zones of the bigger zones. Very important. All right. So, for instance, we want to buy, we want to make sure that the price is in a rising channel at least, or the price is retesting a support level, or the price break above a resistance level and retest it in the bullish zone. If we want to sell, we want to sell in a bearish zone, provided that the price is break below its support level, retest it and turn around, or the price is in a declining channel. We don't sell anyhow because we are in a bearish zone, but we want to sell at a hot spot trading zone in the bearish zone. Paying attention to the price itself and understanding what the price is communicating to us. All right, so 7855. This level, you must not forget it if you are trading China A50 index. The next key level, which is for next week, this is a short-term key level, is 7309. It's also another equilibrium price level, dividing the market into two zones. Above 730009, priority to bullish signal. Below 7309, priority to bearish signal. So now the price below this level here, this is 73 where my cursor is. This is 7309 for China 50. All right, index is below it already, so we will prefer it to come back and retest it and to find a resistance right there. And if you receive a signal to sell on the edge, then we will sell it down, or the price is in a declining channel. All right, pay attention carefully. The price is in a bearish zone, but the price can be at a support. The price can go up in a bearish zone. These are transition zones, but if it goes above it, pay attention. Right now, for the long-term key level, which is 7855, the first equilibrium price level that I told you, which you should not forget up to the end of December 2013, is 7855. We are in a bearish zone. Again, the second level that I mentioned to you, 7309, the price is again below it, but it's going up now. If we draw a trend line on this chart, you will see that if I draw a trend line along the price break out of this bearish trend line now. Follow my cursor here. So, though we are in a bearish zone, the price has broken above a bearish trend line. Follow my cursor. It's out of this trend line. It's a common trend line along this price on the daily chart for now. All right. So this is it for the China 50 index. The next index, talking about how do the pro trade Asia index, we are focusing on China A50 index, Indian 50 index, Nikkei 225, Japan 225 or Nikkei 225 index, Hong Kong HS42 index. Okay, these are the these are the indices that we are paying attention to. The next index that we're going to watch is Indian 50 index. All right, Indian 50 index. I have again two equilibrium price level for traders. The first one is at 5813. Note it down. Priority to bullish signal above 5813, but we do not buy anyhow. Remember what I said, I don't want to repeat myself. And priority to bearish signal below 5813. The short-term equilibrium price level for Indian 50 index is 5848. You have to understand that the 5848 is not too far from 5813. So where my cursor is now, at 5813, right above it, just there, is a 5848. It's the same zone. When we are talking about price level, we are not talking about a thin line. We are talking about zone. All right. So don't see it like a exact level or magic level. See it like a band. Okay. See it like a band. Okay. So that's what I'm saying to you. 5813, 5848 is the same zone. All right. So pay attention to this key level. Priority to bullish signal. So what I will say to you, you can see now the price below 5813. You see, yeah, right here. So 5813 is here where my cursor is. So the price now closed. This Indian 50 has closed here at 5763. So below is bearish, but we do not sell anyhow. Draw your trend line, draw your channels, and understand the language of the price. Break below, retest, turn around. So we are in a bearish zone. We want to sell. We want the price to break. We want to highlight the resistance level, the key levels. Remember the transition zones and the invitation zones. Draw the key level in each zone. So if you're in a bullish zone, draw all the key level that you see. So there's one here, the price change direction here. Draw them and know where they are, and you want to buy or you want to sell, you want to buy in a bullish zone, buy at a support level after the price find a support there. So you want to understand what the price is doing in a bullish zone and what the price is doing in a bearish zone. Do not sell just because the price is in a bearish zone. Moving on very fast, and to avoid that the video is too long, ladies and gentlemen, I'm bringing on another index. So this is it for the Indian 50 index. The first level is 5813. The next level is 5848. Next index, talking about Japan 225 or Nikkei 225. The first equilibrium price level that is dividing the Japanese market into two zones, because these Nikkei 225 represent the 225 blue chip major stocks in Japan. All right, remember, very important. The first key level for the Nikkei 225 is 13442 here. I don't want to tell traders how I calculate these key levels, but I just give it to you. 13442. 13442. This is the first equilibrium price level for Nikkei 225. Up to the end of 2013, up to the end of December 2013, do not forget the level 13442. 13442. Note it down. If you trade Japanese stock or you trade, okay, the Nikkei 225 index itself. If you are trading any Japanese stock, know where is the index itself. If the index is in a bullish zone and you receive a buy signal for the index itself, then you will give priority to stocks that are bullish on the Nikkei 225. On the other hand, if the index itself is bearish, you want to concentrate on stocks also that are bearish. Checking also the fundamental. It's not all about technical alone. You are trading stock, you must check Google Finance, you must check Yahoo Finance to check the fundamental, to check the economy news, to check the management. Do not trade any stock purely based on technical alone. It's completely wrong. All right, that's not the best way forward. For professional traders will tell you that they are technical traders, but they are aware of the news that are connecting to the stock. So they may say to you, I'm a technical trader. Yes, but they know what's happening for that stock. They know the management. They know what sort of product they are selling. They know whether they have some litigation pending on them. They know that if they are having a lot of problems, they know. But they will make their decision based on technical alone. But it doesn't mean that they close their eyes or they don't want to know anything about the stock. They know very well the stock, but if they are able to enter the trade, they will use technical analysis or they will use cycles. All right. For the Nikkei 225, as I told you already, up to the end of 2013, do not forget the level 13442. Priority to bullish signal above 13442 and priority to bearish signal below 13442. The short-term equilibrium price level for the Nikkei 225, which we must watch next week, all right, for the Nikkei 225, all right, is at 13891. You have to understand that the short-term equilibrium price level for the Nikkei 225 is above the long-term equilibrium price level, because the long-term equilibrium price level is a 13442. The short-term equilibrium price level for the Nikkei 225 is at 13891. 13891, that's where my cursor is. So this is the first level we are watching. So you are day trader, you are swing trader. Next week you are watching this level, the short-term equilibrium price level for the Nikkei 225 is at 13891. If the price is above the 13891, priority to bullish signal. TSTW traders will also implement, very important, trading idea part 1 and trading idea part 2 to make better decisions. All right, it's not because the price in the bullish zone. I like to repeat this to traders over and over that we just buy. If you want to buy, we want to buy in a rising channel, or we want to buy if the price finds support. So break above a resistance level, retest it, and boom, up. Or the price is at a support level and the bullish momentum is increasing. This is very, very important. If we want to trade, we want to draw a trend line, we want to draw the channel like here. This, if you draw a common sense trend line along this chart here, okay, so it's this common sense trend line is broken. The price now above the bearish common sense trend line. If you follow my cursor, I didn't draw the trend line, but I'm just showing you here. Okay, so you want to know what's happening. Okay, so there is a key level here, which is 13891. So if break above it, we will prefer it, okay, to roll it, maybe to retest it and up. But GSTW trader may apply trading idea part 1 or trading idea part 2 to know, okay, other key levels. Okay, very, very important. All right, moving on very fast. We have finished now with the Nikkei 225. This video is about how do the pro trade Asia indices, and we are discussing China 50 index, India 50 index, and Nikkei 225. The next index talking about Asia indices is Hong Kong HS42. For the Hong Kong HS42, the first equilibrium price level that is dividing the Hong Kong market into two zones, which we shouldn't forget up to the end of December 2013, is 21964. Where my cursor is here is this zone. Remember, this is not just a single line, it's a zone. Though I'm giving you a price level 21964, see like a band, okay, 21964. Above 21964, priority to bullish signal, as I explained to you before, and priority to bearish signal below 21964. Now, for the short term, okay, equilibrium price level for this Hong Kong HS42 index is 208, okay, 20886. You have to understand that the short term equilibrium price level is below the long term equilibrium price level. So right now the price above the long term equilibrium price level, so we will be watching more the long term equilibrium price level, because the price is near the long term equilibrium price level. We must be keeping our eyes on the long term equilibrium price level, because now we can see that the short term equilibrium price level is far below, okay, the long term equilibrium price level. So next week, instead of watching the short term equilibrium price level for this Hong Kong HS42, we will be watching instead the long term equilibrium price level, because the price has run away from the short term equilibrium price level, is now at the price has reached, okay, the long term equilibrium price level in the zone of 21964. We do not want to forget a level 21964 for the Hong Kong HS42 index. All right, so the short-term equilibrium price level for the Hong Kong HS42 is 20886. Priority to bullish signal above, priority to bearish signal below. Right now, the long-term equilibrium price level is what we need to watch. Ladies and gentlemen, this is about how do the pro trade the Asia index. We were indices, okay. We were watching, okay, China 50 index, India 50 index, Japanese 225, and a Hong Kong, okay, HS42. Ladies and gentlemen, to summarize this video to traders, okay, very fast, the professional will check the market environment. They will identify a setup, then they will validate the setup. Next, they will look for a signal, they will wait for the signal. Once the signal is activated, they understand there are two types of signal, a direct signal and an indirect signal. Once we see the signal, now we breathe in, we breathe out. We will check the risk-reward ratio, and we want to select a low-risk entry point. If the risk-reward ratio is useless, we don't want to trade at all. If the market environment is not viable, we don't want to trade also. All right, this is very, very important, being selective and being defensive. As always, we want to use the 5% money management rule so that we do not expose, okay, more than 5% of our trading account. If you open 10 trade or 100 trade, the total amount that we are risking on all these trade must not exceed 5% of our trading account. This is so important, because in case anything happen, okay, we don't lose, okay, 50% of our trading account. We only will lose anytime if anything happen, and all our trade went upside down, we only lose 5%. Okay, very, very important. All right. The next thing I want to mention to traders, the equilibrium price level. We divide the market into two zones. I don't want to tell traders how I come to these key levels, but these are very important levels. For the China 50, the level that we do not want to forget up to the end of 2013, the level is 7855. For the India 50 index, the level that we do not want to forget, okay, throughout this year, 2013, is 5813. For the Nikkei 225, we don't want to forget 13442. And for the Hong Kong HS42, we don't want to forget 21964. This is about how do they pro trade Asia indices. I hope you have learned something from this video and will put it into use, okay, to make excellent decision. We are the TSTW SYS008 traders. Until the next time, enjoy yourself and be very happy. Speak to you soon.